Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Apple parks its electric car project in a sign of the EV industry struggling, as well as that Germany and Italy torpedo new EU supply chain law. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is on the topic of Apple and the EV industry. Now, Apple has told its staff that it will abandon its efforts to develop a new electric car. This comes following years-long efforts to develop a vehicle to rival the likes of Tesla. Now, we sometimes visit the stock of Apple and the company of Apple, not only because of its important kind of figure within, the tech industry as a whole and within, US equities as a whole as well, but ultimately because it's a very interesting stock, and I think one that's, very much traded by those, within the kind of new age of investors and traders and that kind of thing. That being, because of its being as a kind of tech stock and that kind of thing, and incorporating new concepts such as AI, we always kind of have our eye on Apple. But what we're interestingly seeing here now is Apple kind of moving away from that industry of electric vehicles, which we know, of course, as is becoming very, very competitive, and has some very big names within it and also emerging from it. Just think Tesla. I think that's the trademark. Everybody kind of knows it now as the key electric vehicle kind of car and car manufacturer. And that's largely because of the way that electric vehicles have shaped their kind of hype and their future within media. Ultimately, when people think of electric cars, I think they're mainly kind of seeing them as this kind of futuristic concept, this way towards establishing a more sustainable life on planet Earth, and a kind of another vehicle, kind of two meanings here, another vehicle towards progress. And so that's why I think this kind of move by Apple to now move away from this project is just so significant, because it really does kind of pour over all of that hype that we were kind of seeing emerge around the topic of electric vehicles, and all the things that kind of come with that, whether that be the AI systems embedded within electric vehicles, or the kind of more sustainable ways of kind of using energy, or even the new kind of self-driving aspects to cars, which kind of electric vehicles kind of pride themselves on. Those like Tesla have really led the kind of hype around such concepts, and so this is so important to understand, and will ultimately not only just affect Apple's stock, which is why it's important to talk about, but also it will largely affect the EV industry as a whole, as this article will talk about, and also US equities as a whole. And it's really important at these times where tech is back on the rise once again on the US equities front. We also kind of look at some of the downsides that the US equities are also experiencing, and as we'll get to in this, whilst Apple is kind of moving the money away from this project and into others, ultimately this will be a negative for the kind of representation that Apple is trying to hold as a very progressive company, and so I think this is super important to talk about. Now, this comes after years-long efforts to make a vehicle like Tesla, as I said, and I think that's the key thing here, is Tesla is once again kind of reaffirming its image as the kind of key electric vehicle manufacturer, and therefore kind of drowning out the competition, despite even massive multi-billion-dollar corporations such as Apple, which are trying to challenge it. Now, the decision to end the car, now according to Apple's chief Tim Cook, they will now switch their funding to AI. So still, staying on topic, of course, of technology and tech, and now moving, from one piece of hype to the other, really, going from EVs to AI. Obviously, I think AI is kind of more of a broad term in the way it might affect Apple. You could probably integrate it into more of these devices, whereas EV was kind of, this new sector of industry which Apple was trying to embark on. And now it's seemingly kind of failed on that. So I think it's a very interesting pivot to note from Tim Cook. Now, the decision to end the car project known as Project Titan has damaged the image of the electric vehicle industry as a whole. EV sales growth has now been slowing worldwide following consumers being put off by their higher prices and added compromises with charging. That said, as we've spoken about in previous articles, we obviously know that the automobile manufacturing industry at the moment is struggling anyway with demand, and that's without it even being in relation to EVs, and that's simply because many people finance their cars and interest rates are going up, and cars are very expensive, so people just are not looking at the moment to kind of replace their maybe 3, 4 or 2-year-old vehicle for a new one. And I think that's also an issue that's kind of important to note, some context which is important to add in here, which the Financial Times didn't really look at. So definitely keep that in your mind though when we're kind of talking about this kind of thing to do with demand maybe dropping on the EV front. Now, their sales are still rising worldwide, however, with battery vehicles' share of the market still rising 2.8 percentage points to 15.8% last year, but this is still lower than the 4.7% rise in 2022. In nations such as the UK, the market share has in fact declined. Most new EV companies are struggling greatly, with startups such as Rivian and Lucid, both struggling greatly and kind of presenting lackluster results last week, and as a result causing share prices to tumble, and signs of such a struggling market has seemingly led Apple to the realization that it too would have struggled to break into the evolving market despite of course its great capital reserves. Now, as for how much their car would have cost, reports put the number at $100,000. So a very expensive car, which Apple's kind of moving towards. So something probably wasn't mass consumer based maybe, and more of a luxury kind of car good. Now, a large focus of Apple in relation to EVs has also been self-driving cars. However, autonomous vehicles have had a reality check recently following a great deal of hype and investment, with car brands such as General Motors already scaling back its plans for self-driving cars. The key reality check for self-driving cars has been the technological issues. So this is very, very important to keep your eyes on, and anything relating to Apple or EV car, the car industry, or AI or anything like that. Obviously keep your eyes out for and incorporate that into your trading ideas maybe. That's all to talk about in this article though. Next article to talk about is to do with Germany and Italy. Now, Germany and Italy have now destroyed a new EU law which put liability on companies with alleged human rights abuses in their supply chain, with this being a seriously hot issue of contention following supply chains involving China's Xinjiang region where human rights abuses are being alleged. Now, this is certainly not the first time that we've spoken about this kind of EU supply chain law, or more recently we kind of spoken about the kind of alleged abuses within the Xinjiang region and how that's affected German car manufacturers. As recently we spoke about how the car manufacturer Volkswagen had a part from that was produced within China's Xinjiang region, which was being sent off basically to cars within the US, which was technically banned by the US already. So Volkswagen was actually not allowed to have that car component that was manufactured in Xinjiang within the US basically, and as a result Volkswagen did report this, so they did kind of hand themselves in and say we didn't know this, it kind of but we've just found it out. What can we do? And they are removing that part. So this is kind of coming back to this continued issue, which is kind of emerging more and more in relation to the West's kind of trade relations actually with China. So, not only do we kind of have this more niche topic of, the EU supply chain and this kind of issue with car manufacturers, but I think it reflects, a larger issue as a whole, which is important to kind of incorporate into ideas that basically the US and Chinese trade relations are clearly worsening, and that's also affecting now other kind of supply chains and trade relations within Europe, so with the EU. And that's kind of what we're seeing being reflected, whilst we are seeing Germany and Italy strike this down. As we'll speak about in a moment, other European nations are actually calling for this supply chain law to be passed. So this is super important to understand, as we've already seen the effects, as I just spoke about, within the US with Volkswagen's exports going to the US, and then certain exports being penalized for having certain car components that we just spoke about that had been manufactured in this Xinjiang region. Now, this proposed due diligence law forces companies to take the responsibility for any human rights abuses or environmental damage found within their supply chains. Xinjiang is a focal point of the topic, since the Chinese government has been accused of using forced labor and ordering mass detention of the local Uyghur population. Both Volkswagen and German chemical maker BASF have plants in the region, and that's where the key kind of issue came from in relation to the US, was the fact that Volkswagen obviously has a plant there. They're manufacturing certain components. Those components go into cars, which then go to the US, where they have exports from that region and China banned. And so as a result, then there's a conflict there. Now, the US has since banned imports from northwest China, and the EU is also adopting new restrictions regarding forced labor. So it'll be interesting to see how that EU law does now affect, Chinese and EU relations as well. And now French officials have attempted to bring Germany and Italy back on board by making the suggestion that the scope of the law could be reduced drastically. And that's on the topic, going back to what we were talking about with, certain nations still being for this supply chain law within the EU. So definitely keep your eyes on, China and the US, China and the EU, and China and the West as a whole, and also these more niche topics in relation to supply chains, maybe the EU, and key nations which rely on automobile manufacturing, as it's a very key industry, and one that kind of is really easy to quantify and kind of look at. So definitely keep your eyes on all of this. That's all to talk about in this article, though. Next article to talk about is to do with the US 30. The charts. Sorry, not the next article, but the next topic to talk about, of course, is the charts. We've covered the articles. And where we are beginning, of course, is the US 30, talking about US indices as a whole. Now, obviously, ending off last week, we did see a great amount of bullish momentum. That said, starting off the new week, the week that we are currently in, obviously, we have seen some, very bearish momentum kind of return to the charts, with a retracement taking place as presented on the charts in front of me, where we have seen since Monday kind of this sell-off take place, and we've continued lower. But that said, we did know that on the US 30 there were these kind of three key Fibonacci retracement zones which price could kind of interact with, and it would be very reasonable to come away in a bullish fashion from them. And the first one was the 3820, which lined up with those previous highs that we had seen, all-time highs on the US 30, but price broke through them. And the next one we kind of spoke about was the 50%, and currently that's the kind of price level that we're actually seemingly interacting with at the moment. Whilst we are interacting with it, we're not actually finding that much bullish momentum. As you can see here, with the bullish momentum that we have had, we have then sold off from that level. So quite possibly the next level which price is going to make its way down to is where this 6180 Fibonacci retracement level does lie, which lines up with this key liquidity zone as well, where we're expecting a great deal of bullish momentum. So definitely keep that on your mind, as this 6180 could now be the last kind of zone really for price to react to. Obviously there is always that 7860, but ultimately would we really say the 78.60 has anywhere to line up with here, which price would make sense reacting from? I mean, if price is breaking through the 38.20, where we know there's a great deal of bullish momentum, it's breaking through the 50% where we've seen a bullish reaction from, and then the 61.80, which has the greatest amount of liquidity around it, are we really going to say that there's still bullish momentum in US equities? And we do know that there is certain issues within the US economy with certain US economic data, and especially with the Goldman Sachs CEO yesterday basically saying that I think that he thinks US investors are kind of too optimistic over the idea of a US soft landing. So definitely there is some kind of pessimism that's kind of returning to US equities. So the 61.80 is kind of that last level which price could react to, but there is certainly still some fundamental kind of pressure to the downside. So keep that on your mind in regards to the US 30. But that's all to talk about on the US 30 and US equities as a whole. Next to talk about is the dollar. We've had quite a lot of US inflation rate, US data this week, and today we're getting, of course, some US inflationary data, so that's going to be very important. But recently we've really just seen consolidation on the dollar. Price is currently sitting around that kind of liquidity zone that we've marked out before, but ultimately not too much momentum one way or the other. Hopefully we'll see some movements coming from these key US pieces of data today. We are getting the US inflation rate figure, as well as we're having numerous Fed officials speak today, so all of that should really create a really interesting picture basically for the dollar, based on previous expectations for inflation, which we'll come to on the economic calendar after this, so waiting around for that, but also with that rhetoric from those Fed officials. So listen out for all of that and look out for all of that. Next to talk about is Euro USD. So still on the topic of the dollar, where we have kind of seen a reaction to this key liquidity zone that we have noted before, which is interesting to see because recently, since a week or two ago, we have seen price kind of start its way back up on the bullish side, but price has seemingly reacted to this level now and has kind of sold off. And on the lower time frame, say we scale down onto the 1 hour, we can kind of see a sort of retracement being made at the moment, which could be argued. But that said, I don't think price is actually interacting with any of these key levels, more so reacting to this Fibonacci level. So, keep that in your mind as well. But, maybe we've got a kind of new, maybe we're kind of done with this longer term of retracement, this longer period of retracement than usual, and now we're ready to roll back over onto the downside. So keep your eyes on Euro USD. Next to talk about is Pound Yen. Pound Yen's obviously been a very interesting pair. That's where I got in my bullish position a few days back. And since then we have seen this kind of movement to the upside, which has been very interesting to see as Pound Yen basically makes multi-year highs basically. So I've kind of been calling it all-time highs. It's not all-time highs, but it is multi-year highs, and very significant levels indeed being made by Pound Yen at the moment. But what we did say was, like, on this kind of lower time frame, we were seeing a kind of bullish, a bearish head and shoulders pattern kind of being made, where we did have this kind of baseline and then these two shoulders forming, which is a very kind of bearish image, as it kind of reflects a change in trend. We're starting to make lower highs and lower lows rather than continuing the trend to the upside. Further than that, we did break below this kind of rally trend channel. So that's something that's very important to talk about on Pound Yen. That said, we still haven't broken below this baseline. We did tag below it, we did spike below it, some slippage, but we really haven't seen that move all the way to the downside, so it's still kind of in this ranging motion. So keep your eyes on Pound Yen. Very, very interesting at the moment. Next to talk about is Bitcoin, which has just been so incredibly volatile recently, you can't even fit it onto the charts. So within the past few days, we've just seen Bitcoin just push to the upside beginning Monday, going all the way from $51,000 per Bitcoin to now the current level of $61,000 per Bitcoin. But yesterday, we actually saw price make its way all the way up to basically the $64,000 a Bitcoin mark. So insane volatility at the moment and insane bullish momentum. One has to ask though, how sustainable is this? On the RSI, we're currently at the 90 level. Bear in mind, the kind of the range that we do usually see on the RSI, which kind of notes whether price is overbought or oversold, is 70 to 30, and we're currently at 90, so 20 points above that figure. So you can't go much higher, and this is very, very significant and represents a great deal of bullish momentum at the moment. So keep your eyes on Bitcoin. It's just hard to calculate where on earth it could stop though. Next to talk about is gold. Gold is continuing to kind of range and consolidate. I think this is largely because we have so many conflicting images at the moment and messages, especially within the geopolitics and world politics sphere, which is all forcing kind of gold to take its time and find its feet. And added to that, obviously, we have lots of different data coming out at the moment, and certain nations' data's kind of walking back on itself month after month, and so we're not really seeing much momentum one way or other on gold, but still definitely keep your eyes on gold. Lastly to talk about though is oil, which has reacted once again to this liquidity zone on the upside, so keep your eyes on oil. That's all to talk about in the charts though. Lastly to talk about is the economic calendar, of course, where we are getting a lot of very important data today, which I need to get through quickly. So firstly, we'll be getting Aussie and German retail sales data, followed by that French and Spanish inflation rate figures, and then Swiss GDP growth rate figure. Followed by that, we're getting the German unemployment rate figure, as well as some British mortgage applications data. After that, in the US and NA as a whole, we're getting Canadian GDP growth rate figures, followed by the US inflation rate figure, so a very important figure to kind of note there. Followed by that, we're then getting numerous Fed official speeches and the Japanese unemployment rate figure to end off the day. So lots of data to kind of talk about, lots of data to look out for and listen out for, but we've covered lots in the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.